All right, let's talk about cryptocurrency. It's a world that's, well, it's super exciting, but let's be real, it can also be incredibly confusing, right? It really is like a two-sided coin. On one side, you have this potential for huge rewards, and on the other, well, some pretty major risks. So our whole goal here today is to break down both sides for you.
So, what's the real deal here? Is crypto actually the future of money? This digital gold that's going to change everything? Or is it more like a giant, high stakes digital casino, a huge gamble where you could lose it all? That's really the core question we're going to dig into.
Look, our goal is pretty simple. We're just here to give you a clear, balanced picture. We're going to try to separate all that crazy hype you see online from what's actually going on. The reality of it. That way, you can start to make up your own mind. Sound good? Okay, let's jump in.
Okay, so first things first. Before we get into all the good stuff and the bad stuff, we've got to make sure we're all on the same page. Like, what even is cryptocurrency really? Let's build a quick foundation.
So at its heart, cryptocurrency is basically digital money. It's secured by this really complex code, which is where the crypto part comes from. But the key phrase here, the one you really need to get, is decentralized networks. What does that mean? It means there's no bank, no government, no single boss in charge. It's kind of like a shared public notebook that everyone can see. And once something's written in it, no one person can just go and erase it. That is a massive, massive difference from traditional money like the US dollar.
Okay, so now that we've got the basics down, let's get to the exciting stuff, the potential upside. I mean, why is everyone so obsessed with this? What's the big allure that's pulling so many people in?
Well, there are a few big reasons. The first, and let's be honest, the biggest one, is the potential for insane returns. We've all seen the headlines. Then there's diversification. Adding something to your portfolio that doesn't just copy what the stock market is doing. It's also a way to get in on the ground floor of some really cutting-edge tech, like DeFi, which is basically this whole new world trying to rebuild finance without the big banks. Oh, and you can trade it literally any time of day or night, 24/7. No waiting for the market to open.
But okay, for all of that excitement, there's the other side of the coin. And you absolutely have to understand this part. The risks here are huge, maybe even bigger than the potential rewards. So let's take a deep breath and flip that coin over. If you remember one single word from this entire explainer, please make it this one: volatility. The price swings are just wild. I mean, we're talking about numbers that can shoot up and make someone rich one day and then completely crash and wipe them out the next. And that's not some kind of mistake. That is the market right now. It's a feature, not a bug. And honestly, that crazy volatility is just the start. The whole market is kind of like the Wild West right now. There isn't a lot of regulation, and that means there are tons of scams and frauds out there. Then you have the security risks. Your digital wallet can get hacked. People can try to trick you into giving up your info. And here's the scary part. If you lose your password, your private key, your money can be gone. Forever. There's no customer service line to call. And on top of all that, just learning how it all works is, well, it's a really steep learning curve.
So why is it such a roller coaster? Well, think about a stock like Apple. Its value is connected to real things, right? Like how many iPhones they sell, how much profit they make. Crypto doesn't have that. Its value is driven almost completely by feelings and hype, what people think it's going to be worth down the road. So a single tweet, a rumor about a new law, a story about a hack, any of that can send prices soaring or crashing, literally overnight. At its core, it is purely speculative. And that right there brings us to probably the single most important point of this whole thing. This is the big aha moment. It's the fundamental difference between crypto and a regular stock. And honestly, this is something a lot of people miss, but it is the absolute key to understanding what you're getting into. This chart just breaks it down perfectly. When you buy a stock, you're buying a tiny piece of a real company, a company with products, employees, profits. Its value is tied to how well that company does. Crypto, it doesn't do any of that. It doesn't make money on its own. It doesn't pay you dividends. So think of it this way. A stock is like owning a small piece of an apple orchard. That orchard grows apples, it produces something of value. Crypto is more like owning a rare baseball card. It's only worth whatever the next person is willing to pay you for it. It doesn't produce anything on its own. So, keeping that huge difference in mind, let's bring in some of the investing legends. How does something like crypto stack up against their classic, time-tested advice? Let's take a look. First up, of course, Warren Buffett, the Oracle of Omaha. His entire investing philosophy, the one that made him a billionaire, is built on one thing: buying great businesses.
Listen to that word he uses, company. He's not buying speculations. He's buying productive assets, things that actually create value. That's his entire game.
So his principle is super clear. He invests in things that produce income, that have a real business behind them. Going back to our analogy, he wants to own the apple orchard, not the rare baseball card. And since crypto doesn't generate earnings or have a business model, it falls right into that purely speculative bucket that he's been warning people about for decades.
Okay, next up, let's look at someone like Dave Ramsey. His advice for building wealth is really simple but incredibly powerful. It's all about staying invested for the long haul, not trying to jump in and out to time the market. It's a strategy that's all about slow and steady wins the race.
So how does that fit with crypto? Well, a ton of what happens in the crypto world is people trying to time the market perfectly. Buying at the absolute bottom and selling at the absolute top, sometimes in the same day. That is the exact opposite of what Ramsey preaches. He's all about time in the market, not timing the market. Let your investments grow slowly and steadily over many, many years.
Okay, we've covered a lot of ground here, right? We've talked tech, the crazy highs, the brutal lows, and we've even heard from the legends. So, what does this all mean for you and your money? Let's boil it all down.
Here are the 4 big things to really let sink in. Number 1, high risk, high reward. You can make a lot, you can lose a lot. Number 2, it's a speculative asset. Its value comes from what people hope it will be worth, not from what it's earning today. 3, the volatility is real and it's not going away anytime soon. It's just part of the deal. And number 4, and this is a big one, you have to do your homework. This is not something you just casually jump into. And all of that brings us to the final, and honestly, the most important question, and it's one only you can answer for yourself. Now that you know it's a high-risk, speculative asset that doesn't produce its own income, does something like that have a place in your long-term financial plan? There's no single right answer for everyone, but really thinking that question through, that's the most important step of all. Thanks for watching.